G'day folks, welcome back to another update for the German DAX and the Japanese Nikkei. Now they've both retraced since our last video and they're consolidating, so possibly a bit of a up move, but again just be cautious. We always trade with the CCI. We also include some back testing, and before you go any further, make sure you hit that like and subscribe button. Also, don't forget we're putting out a weekly video now. It's called Pete's Investing Plus One, and this is a dumbed down version or a very basic approach to the trading analysis we do. So if you find our common daily videos a bit too complex, hopefully these Pete's Investing Plus One videos help break it down for you. In terms of the outlook, as of today, April 14, the German DAX, despite a sluggish domestic economy, the DAX has gained 6.75% year to date, buoyed by strong performances from tech and financial sectors. Easing US-EU trade tensions and a slight dip in German inflation to 2.2% have fueled investor optimism, with projections suggesting a potential rise towards 21,000. However, structural economic challenges and global uncertainties remain concerns for sustained growth. The Nikkei, after hitting a 1.5-year low, the Nikkei rebounded sharply, closing 6% higher, driven by Wall Street's recovery and investor bargain hunting. While positive economic fundamentals support a long-term uptrend, ongoing trade tensions and potential disruptions in semiconductor supply chains pose risks to sustained growth. So first, looking at Germany, look at the long-term trends. So on the monthly, the price is still above the moving averages, but notice on the CCI it's broken into that moving average range, giving us a bit of a caution, potential neutral positioning. So just be caution of that on the monthly. On the weekly, we've already broken down below the moving averages. As a result of this bearish divergence, we had lower highs on the CCI versus higher highs in the price. We had a smaller one back there. Let me just zoom in a moment. We had a smaller bearish divergence in those little peaks there, and that pulled back as well. And since then, the CCI has been pretty much below that previous high, although the price has gone beyond the previous highs. So, and at the moment, we've actually broken in down on that Fibonacci. So if we drew a Fibonacci between that high and that low, that's at 23 minimum range, 38% minimum retrace, and it's already done that. So that's on the weekly. And if we look at the daily, we've had another bearish divergence. This one's already broken way past the Fibonacci minimum retrace and actually gone beyond the 100% retrace if we drew it to that level there. And at the moment, it's actually retraced up, and on the daily, the CCI has broken into that moving average range, so avoid going long or short until this comes out above or below that moving average. If it breaks below and the price is below there, as it is at the moment, further short trades to be taken on the intraday. But if that breaks higher, we expect then the price to break into that moving average range and higher as well to be more bullish. But at the moment, neutral positioning on the daily. Now, if we go to the intraday charts, again, we look at for any divergence. So at the moment, as I said, neutral on the daily. So avoid going long or short, and we try to find any divergence, and there's no divergence to identify currently on the price and the CCI. And what I've got here is the back test for the stop loss approach and the back test for the average down approach. Now the strategy is the same as the way we read the higher time frames. If the price breaks below, if the CCI breaks below the moving average, and so does the price, that's where we enter a trade. That's where these trades were entered. And we close it out with a 0.0003 or 0.03% gain of return. Then again, we don't go long, we only go short. And there's another entry made there. The CCI broke below, and so did the price. Now the CCI rose slightly, but didn't rise far enough on the price retrace to average down. Then it broke down again, and that continued. And 3 hours later, it closed out again with a trade on both the stop loss and the average down approach. But overall, since we started this back test here from the daily, when the daily CCI broke below the moving average at that point, you would have entered the trade on this candle here when the price broke below the moving average, and so was the CCI. That's where this back test started. And both of those yielded $5,466 to date. So for the Japanese Nikkei, we first look at the monthly. That's already broken below the price moving averages, and the CCI has already as well been below that moving average range for a number of months now. You'll notice here we had a bearish divergence back in March 2024 versus high highs on the price, and that broke quite strongly down on that month there, and it had a very strong retrace to the downside. And since then, it's bounced out of that minimum 23-24% retrace, and now it's broken down again. And again, for those new to the channel, we draw a Fibonacci between that high and that low. That's at 23.38% minimum retrace we expect after a bearish divergence. And obviously the opposite applies for a bullish divergence to the upside. Now on the weekly as well, we've had a couple of bearish divergence here. This one dropped the first time, and this one more recently. We've had another pullback into that 23.38% range. The CCI is still falling. The price consolidated for a number of this is the weekly chart, consolidated for a number of weeks, then finally broke to the downside again. So bearish momentum on the weekly. And on the daily, likewise bearish, but notice at the moment it's broken into that moving average range and giving us a bullish move on the CCI. The price is still below the moving averages, so I'd like to see this break into that moving average range and go a lot higher to be more confident of going long. Retrace a bit higher, then pull back down again. So again, I'd like to see both the price and the moving averages of the CCI in the same direction. Now if you go to the intraday chart on the Nikkei, so again on the 1 hour chart, we take predominantly short trades, and that would have happened from back here when that candle there broke below the moving averages. And that would have been at that point there on the pullback on the back test. And you can see here most of this period they were the same pretty much, except for the first entry there. We had one average down at that point. And most of those periods we had the same number of entries, and then more recently the price has retraced again further to the downside, to the upside I should say. But again, the way you trade this and the way you stop your losses, obviously the stop loss approach is when it breaks more than 5% in the opposite direction, going long in this case. And the average down approach, you don't use a stop loss in that way. Instead, you follow the daily trend and you close out the trade when that CCI on the daily breaks into that moving average range. You need to give it some breathing room, and that's why this one's now gone well beyond that moving average range on the daily. So theoretically, you would have, if you were trading that, you would have taken that and stopped your positions at that point there. And that's indicated, you can see there on the left chart, on the bottom left, the CCI, that's where it touches the moving average, and that's where you would have closed out your position on both the stop loss approach at the very least and the average down approach. Now the stop loss approach, this top one, at that point generated 8,970, and the average down approach generated 9,470. So again, you wouldn't have taken these trades because the daily's gone in the opposite direction. So again, if you're new to trading, don't forget we've got the Beats Investing +1 video series on a weekly basis, and where we have a guest who asks some very basic questions, and hopefully that helps you also learn the strategies and the analysis behind what we do on a daily basis. Thanks for watching. Hit that like and subscribe button, and then see you in the next update.